Hi everyone, thank you so much for tuning in. I'm Srimati Sridhar with the World Bank Group and delighted to have with me here Tina Vandersteel, who is the head of emerging country debt at GMO. Tina, thanks so much for being here with us.
Well, thanks, Sri, for having me.
Of course. So to kick things off, can you tell us about the positive role that you believe private creditors can play in international development?
Absolutely. I think it's a perfect opportunity to ask and answer that question. Here we are at the spring meetings of the IMF World Bank. And just today, the third chapter of the WEO came out and talked about the importance of growth. And if you think about growth, whether it's from the point of view of the mission of the IMF or the mission of the World Bank, or from the point of view of private sector lenders, growth is key to repayment, which is important for us, and growth is key to development. From the point of view of private sector lenders, I think we can provide a useful lens for the countries in terms of what kinds of transparency we need, in terms of having regular investor updates, and more recently, the trend toward ESG investing means the kinds of engagements that we have with the countries includes growth adjacent ideas in the ESG sphere.
Okay. So, given your role in the private sector, why do you think private creditors have been playing a larger role in emerging market lending over the last decade? What opportunities do you think that they're seeing there?
Well, I would say there are push and pull factors.
Okay.
So on the pull side of the ledger, there's a long history of sovereign lending. Carmen Reinhart put out a cool paper a couple of years ago called Sovereign Lending Since Waterloo. And it chronicled how investors who invest in sovereign debt receive a risk premium. In other words, while they take some losses through restructurings, in general, you make more than you lose. In the last 10 years, I would say there's also been a big push factor. So we all know in the post-GFC environment, interest rates on developed markets, government bonds, had gotten to zero and in some cases negative. I think at the start of the pandemic, there was something like $18 trillion worth of negative yielding debt, mostly government debt. So the push was the search for yield. As a credited investor, you're mostly interested in repayment. And so most of the countries ended up being fine in repaying the debt, but perhaps some of the countries that joined late to the party were a little premature in their borrowing and have now fallen into distress.
So I want to touch upon debt restructuring because, as we just said here, private creditors are playing a larger and larger role in the emerging market lending sphere. But at the same time, they're also criticized for being slow or for having subpar participation when it comes to debt relief efforts. So what would you say needs to be done to kind of improve our debt restructuring mechanisms?
Well, one of the ones that President Malpass has been talking about a lot is transparency.
Yes.
So when we think about a sovereign borrower that gets into distress, one of the first things that needs to be known is who all is owed money. And so when I said earlier, it's key as investors that we have some transparency into that. We want to understand how difficult the restructuring is going to be. Especially with DSSI after the pandemic, the sequencing has really been official sector led. So the official sector takes some quick steps and then invites the private sector afterwards. So I wouldn't characterize ourselves as dragging our feet. We're just late invitees.
That makes sense. Well, thank you so much for joining us here today to talk more about this and the important work that you're doing. We appreciate your time.
Of course, thank you for having me.
Of course. That was Tina Vandersteel, head of emerging country debt at GMO. Thanks for tuning in.